Hey guys, what's going on? So wanted to just make the summary video of basically once I've finished that Sunday, pretty much just jump in now and accumulate it all together and put it into one sheet, which basically just gives you a concise outlook of what I'll be looking for during the next week. So split in 6 on 6 with an additional soft watch where you have top 6, including DXY and the soft watch. Additional pairs. So starting in with the DXY, and I'll just expand this just so you get a better full view of it. So we'll be looking at the DXY and essentially as demonstrated throughout the previous videos. If you haven't seen it yet, you'll basically be able to see you won't see the Friday side of things, but you'll see the Saturday and then you'll see the Sunday of basically my process. You can also additionally see that if you go back through my videos and, for example, you look for a particular date. If you look for Friday or Saturday or Sunday, you're going to pretty much see the same process again and again and again. And you can see that this is just generically a routinely thing that I do every week, which ensures that I'm able to get moving forward, and it's the sort of consistent milestones that has enabled me to get better over the weeks ahead. So essentially moving on to looking at this, we can see that we're looking for the next push lower, so we could be in the run of momentum. Now that we've broken this in a flat flag on the DXY, we can see that we're now trading below the line in the sand, and we could be seeing things move towards the inflection point over here. So this is just something I'm anticipating. I don't take trades directly on the DXY, but obviously it's very good to just know where the market direction is on here when you are trading with cross-correlated pairs. Looking at New Zealand yen, so I'm looking at a valid high risk position over here. We can see the there's a hair on my nose, daily pattern over here where we have a potential 1, 2, 3 on the daily time frame. We can see that it's very corrective on the way up, so this isn't the highest of probability trades, and obviously we can see on the daily it's not the clearest of middle sections. If we look at it more refined, we can then see that we do have a clear daily retrace on here, but that isn't just enough for us to take a trade, especially if we put a stop loss above. I think that would damage the risk reward, so we'd look for a more refined entry in here. Daily is looking pretty good with momentum. The daily close as well, sorry, just to cover that bit, it's not the best in my opinion. If we did close down here, it would have been a little bit better, just basically mimicking price action to the left. So I will be looking at this on Euro Yen and understand that we do have a near miss to the higher time frame over here, to the ray line that we did see on the daily just over there, which is more clear on the weekly once again. With that being in mind, we understand that now we could be getting continuation to the downside, and we could potentially play this pattern to see how this forms, understanding that this is higher risk, so we would want to be more on our management, but we are playing the daily structure there. So I will be looking for something a little bit clearer, but 1, 2, 3, take a risk entry on that more refined position on the 15 if applicable, but the 1 hour is more than enough. And then moving on to the next one, which is Aussie Yen. This is more of a higher probability, low risk trade that I'm looking for. In this scenario, we have tapped into a high value area on the daily. We have come in with not the cleanest, but there is probably, the way I see this is just a corrective squeeze towards that value area. Then the next point is, if we look at it on the daily, just back to the weekly. If we look at it on daily, we can see that there's that potential. Now we can just sell off from here. It is a possibility as well, but what I am looking for is perhaps maybe a one more push up and then we sell off. It's a possibility, but like I said, there's more than enough. So even if we just sell off and we break below that low and we create continuation, obviously then I could be looking for a sell, but more than likely I will be waiting in anticipation to see if we do complete a 1, 2, 3 here, to then look for a push down insurance entry and we continue with the sell. So this is pretty much my go-to for what I'm looking for. However, I do understand that we can push down and just sell off from there. EuroCAD, high probability, low risk trade again. I think what I'm really looking at over here is we have on the weekly, we can see how price has moved up aggressively. We're in this accumulation stage. We haven't really completed a 1, 2, 3, but we have 2 bottoms and now we're creating 2 tops with that impulsive push above. We could see a very corrective move to that third touch as well, understanding that there could be an abundance of opportunities within that move alone. We're then seeing over here on the daily, a little bit closer, how we've aggressively been pushing to this override. I'm not going to be looking for the sell immediately. I will be looking for a slight push above because we do have that level of a potential expanding nature to this. So I think it does require a lot more patience. It could take a number of weeks to form, so forth, but it will be ready at some point. this could go very impulsive. This could just push impulsive and then come back down. And for that reason, it's very strategic for me to put it on watch, because now that we've actually had more than enough in this corrective price action, now the momentum is really kicking in and we're seeing it in the market, and we could potentially just see this push above, catch people out on the wrong side, push back down, create a flag, continue to the downside, and then looking at it on a more refined trade, anywhere that we push back down below that ray line, we start creating a continuation, ideally on the 1 hour if the momentum is good. I'll then be looking for the 1, 2, 3 insurance entry to sell. And then we have a Euro GBP. Euro GBP as well, I think, is a high probability, low risk setup as well for myself, but we have this level of liquidity. There's no real significant point on the daily that we're gravitating towards, otherwise we'd be moving up higher to these areas. If we then look at it on the 4 hour, we can then see that we do have a pattern within a pattern. Going back to the daily quickly, we can see that they have this larger sort of section here, and then we ended with an ascending channel. Within that ascending channel, we did create a 1, 2, 3 element to it, which is not completely necessary. We can sell off from here. There's more than enough. We can push down, create a flag, continue to the downside, but more than likely what I would like to see is this ascending creates another ascending internally, and then we push to the top, complete the 1, 2, 3, push down, create continuation, and we sell off. So I think there's a lot of elements of a very good trade in there, and then we can see it in a more refined way that I will be looking for that risk entry on a third touch. This one over here could become a 2-touch, which I'm fully aware of, but over here definitely looking for a 3-touch flag. Down here 2 would be applicable. Depending on the size of the impulse, I would most probably be looking for a 15-minute flag, but understanding that the 1 hour is also probable, but the 1 could come a little bit later, maybe a bit further down in the run. It's just there to demonstrate how I would be positioning myself. Then I've got Aussie New Zealand as well. Once again, this is a little bit more of a valid high risk trade, only because if you look at it on the daily, we came from this hook point, we pushed away. However, we didn't push away very aggressive, which is kind of normal with Aussie New Zealand, that we do tend to have this sort of corrective behavior from times, because this isn't, I don't think this is the dominant direction. I think once this pair has made up its mind, it starts to move aggressively, especially on these buys, as we can see. However, in this case, we are moving down from a correction into a correction, which then kind of causes the question, is this just going to become a larger bull flag to move higher to get to these points? There's a few variations of things, so for that reason, it's more of a valid trade to me. But what I would be looking at is we do have a completion of a 1, 2, 3 here. We do have a sort of liquidity point here, where at this point here we did start selling off, so we could gravitate to that point. However, what I'm more interested in is how we closed on the 4 hour here, and do we continue with a little bit more commitment, create continuation and sell off. So I will be looking for that on the 1 hour, but more than likely a 15 would still be very, very good in this area. What I'm really looking for is just some commitment, ideally more for push, but some commitment to the downside, clear flag which has all the elements that I'm looking for. Tight would still be okay, and then essentially just go with that. But more than likely, I think a 15 would be more probable, especially on Aussie New Zealand, but I am fully happy to wait for a 1 hour. US dollar Swiss, I think this is the last one on my top 6. High probability, low risk. Daily is looking pretty good now. The reason why I've got this one on watch is because usually when the DXY is dominantly moving into a trending direction, we tend to see very good price action on USD Swiss. So I'm anticipating that we do get very good price action and potentially a very nice entry on this. If we can drop off from this area, moving into that high value area again, I would be looking for a push down, a flag and a continuation to take that long, which I believe there was something around about 10% more, 17, something like that I recall. But that's not what I'm really concerned about. What I'm looking for is a clear impulse away, continuation similar to this nature with a 1, 2, 3 element, and then we're taking a short. We'll see a lot of good opportunity across counter-related pairs, and it wouldn't be uncommon to see this push, create another continuation, push, another continuation. Next thing you know, we're all the way down here. With FOMC around the corner, I would be also very much aware with these US-related pairs, just because it's coming out on Tuesday. I'm just going to double check the time, but coming out on Tuesday, and I think that is also going to bring a lot of volatility into the market at 7 o'clock on Tuesday. And then I think when that comes out, a lot of data is going to change, so be very mindful of that, because that can also play a risk factor if you have your stop loss or your position open close to that, because obviously it's a little bit out of session for a lot of us traders, around about 6 o'clock. So volatility kicking in at that time could raise spreads, and especially for people on their funding assessments and stuff, be very careful. That's my best advice there. Euro USD, basically taking this in the same way as the DXY, just a counter related way. Having a little look over here, so we can see on the daily just correctively squeezed up, then got some impulsive behavior continuation, and we're looking for similar price action to that impulse to push up again. However, if we can get continuation on the way, that would be very great. 4 hour, very clear, we had this expanding, which works in line with how the flat flag developed in DXY, and then now we're moving in continuation. Very nice entry in this area over here. Didn't take it myself, did see it a little bit late, so I just kind of, accepted it and didn't get involved, but that is that. So just to let you know about entry wise, very similar to Swiss USD Swiss, just to push away next flag and then go long. This could turn into something a little bit larger if we do push out, come back in, create something. It is what it is. And then also, more than likely, I'm more than happy to wait for that. If it does come back into this area here, oh, that's a steal, honestly. I'd then be looking to actually see if I can get involved on that buy, but for now, it is what it is. Next continuation or larger continuation would be very much preferred. Aussie US dollar, this is a bit of a strategic one now. This one is anticipating that the DXY goes the other way, understanding that we can go long, and if we do go long, then easily I probably wouldn't be looking at this one as much as I'm looking at the others. So I'm anticipating the play to the downside to potentially fill this high value area, or potentially come back down into these areas, or even meet with the trend to the upside. It just really depends on the DXY. So we can see over here that with FOMC coming out, a lot of data can change. It's a Tuesday play, so we could be all the way up here into that 1, 2, 3 area. FOC comes out, we get very impulsive behavior, price is now trading down here, and we create a flag, continue to the downside. Very possible that that could be a gameplay. So I did want to put that on watch as more of a strategic one, but also to understand that there is technically more than enough here as well, which if you look at this liquidity area, we've already tapped into it. It's very much possible that we could push up a little bit and just sell off, or we could just sell off from here as well. So, but I am looking for this ending structure, pattern within a pattern sort of formation, this ascending with a sort of final ending structure within that, back into that liquidity area. Maybe the FOMC pushes price up, taps into the liquidity to the left, and then comes down. Hey, listen, at the end of the day, I would more be in favor of price pushing out, coming back in, and a trade down here, which is below that liquidity area, but I'm not too concerned, because if we get impulsive behavior pushing back in after a completion of a pattern within this pattern, with the shittest middle section I could find, sorry about that, but really and truly wouldn't really class this as a proper ascending. I would just say that we do have that 1, 2, 3 element. I would say that, with the momentum coming back in, that would be higher risk, that would be a little bit lower risk, and that would be better risk. But hey, listen, there could be many variations of things that could happen, but this is just one, and then that's the higher risk play. I've opted in for the reduced risk just because of extra sort of confirmation there. You just don't want to be getting into something here, and then next thing you know, it's like, continuing correctively going up and messing you about. So if I can protect myself from here to that ray line, great. And then if we break through the ray line or start creating continuation, great. So that would be a locked in break even. Let that play out however it wants to play. And then if there's a scaling opportunity and that's at break even, it's a possibility. Probably would add a little bit more protection on it, and then we'll take on the next one and so forth. New Zealand US dollar, very similar gameplay to Aussie US dollar. I am looking at this on the higher time frame, where we're having that 1, 2, 3 element, a little bit of liquidity above it as well, which is interesting. But once again, this one on the other hand has a better middle section, and that's why with Aussie US dollar I do kind of like the idea of that, even though the middle section isn't great, because if this does tap into start selling, then we might see stuff happening on the counter related pairs, which I wrote off GU, which I fully understand, but now seeing AU and NU, I'm kind of seeing that there's that possibility that we could feel that little gap on GU. So Just wanted to kind of point that out there. What I do like about this is there's two ways we could be looking at this, depending on FOMC. Once again, if we get impulsive push out and then we start creating continuation to the upside, you know, that would be plan B. If we do push out, come back in below the ray line, start creating continuation to the downside, all in. I mean, not all in, 1% or 0.5%, but you know, that's basically it really, looking for that trade to the downside. And then even more importantly, Aussie CAD. Now Aussie CAD has some good elements to it. It's more of a valid high risk trade, I'll be honest with you. So in terms of momentum, we are moving to the upside, and we don't necessarily have to come to override 2. There's an override 1 play and an override 2 play, so there's 2 scenarios, but I will be looking to go long. Looking at the 4 hour, what I'm seeing over here is that if you look to the right, we actually have the point of interest that we're moving towards, and to the left we have this larger potential expanding where we have 2 tops, 2 bottoms. We might push up a little bit and come all the way back down. This override would be the first area of interest if we can just kind of tap into this push up insurance entry possible. That'll be a reduced risk entry play for me. And then if we come down to the override, this would be more so where I'll be looking for the risk entry, but I'll be looking for the push in a flag regardless because of the momentum that it would need to get down here. I'll then have to evaluate how that got there and then wait for the insurance entry and take that. But insurance entry, I'll probably try to take that with a risk entry for sure. And then basically that's the play on there. And then here's a more refined picture of it, so you can see, you know, whatever, do its thing, come back down. There's that sort of element of this middle section of whatever this is going to become, and then comes up. You've got 2 bottoms, clear bottoms, then you've got this element of up, and then even if we trade from here to here, there's still an element of a good risk reward, maybe 4 or 5% there. As long as it's 3, and then if we do push through and we start coming to the low, then once again we just wait for us to push up. Insurance entry from this override area. I wouldn't worry too much about the structure, more concerned about trading above that override, clear push through, and then continuation to the upside, and that's what I'm looking for. And then we obviously have the price target on the daily, which we saw. USD yen. Now this is more of a high probability low risk trade, but it does have a high risk factor to it, so it's kind of dipping in between the high risk side of things because of the higher time frame. So I would say that overall it is high risk, but the positioning that I've got on it is lower risk. So what we have over here on the daily is weekly. We can see over here that we have a, call it a hook point over here, and we broke through it, we pushed down, then we started correctively but in a very impulsive way coming back up to that area. So we've tapped into this. There is a sort of value area above it, but it's quite far away, so we'll have to wait and evaluate. And once again, we do have FOMC around the corner, and I have mentioned this a few times, and what we do need to understand about that is this does play a major risk factor as well. So you don't want to just be opening a position because things look good straight away. Let that news play out, and then after that we can start evaluating on which way the dominant market direction is moving to, because that volatility will have a determining factor. Like if we see something like this, there'll be opportunity, you know, within the way, and if there isn't, it is what it is, you know. It just means that we're going to have to wait. So look at that corrective price action coming up to this area. Definitely does create an interest for me personally. I just would like to see this maybe even come up one more time, break above, and then sell off. That's what I'm going to be looking for. So there is this element as well where price doesn't actually get that sell and we commit, we break through the trend, because I am looking at this more like a corrective squeeze now at the final ending within this massive corrective squeeze, and I just want to see this kind of give a little bit of commitment. So right now we do have commitment on the daily. Looking at the 4 as well, we can see that there is somewhat of commitment there. I would like to see this commit through. There is the possibility that this does come all the way back up, which is fine because this isn't my typical sequence so far. It has been a little bit choppy, pulled back 50%, was a bit indecisive, came down, continuation came down. Let it do its thing. The thing is, if the DXY starts to aggressively sell off, then I would understand why this is playing its play. So this is just the one scenario, but if we can get back up here and then break the high, close, and then start selling off, I'll be more interested in that run. But this is just right now it's the more probable scenario in my eyes, that if we see a push away, clear flag continuation, which could be late week, I'll be more than happy to get in there. Obviously I've drawn this a little bit larger. If you can see, this goes into December. It's not supposed to be this large actually. I just wanted to use it for the demonstration of the photo, but more so down here, large enough flag, and then take that to go short, and that's basically it there. Then we're looking at GA, which is the last one on my wildcards. This is a valid low risk trade. What I do like about this is we do have a high value area here, which is not really anything to be concerned with. There was a hook point over here, which once again not the most significant, just the area of liquidity. Price gravitated to it, tapped into it, and then started to move away. GA hasn't been in the most impulsive price action, but as a nature for it, it doesn't look like it usually is. At times, yes, but then, you know, it does have that element of, you know, kind of sitting around for a bit, moving and so forth. So I would say that for GA, this is pretty impulsive. This is just a corrective cycle now where we have this element of this section here, very clear near miss to that low, which for me is basically the market potentially giving me a message that, you know, near miss to this low, then we had this low, and then a near miss again. Just the potential that we're just going to smash through that. But I would like to see structure forming over here with a near miss there. Would this just create more of a middle section, gravitate back up here, and then look for entries? This is how I would take it. I would look for a push down from that section there, push down a flag and go. Risk entries up here would still be good, but I don't want to be caught out on the wrong side of the market. If we can push up and then create a pattern within a pattern, I might be able to find a more refined entry, but more than likely I'll be looking for a better entry just like this. You can see how price does tend to move. Obviously this is just here to demonstrate once again how I want it to look, but we can see once again by the time we get up to these areas, which could be impulsive, it's not very unknown to see impulsive price action on the third leg. We could get up here pretty quickly. For me, the reason why it's last on my wildcards is more so because it may not shape up next week, but as long as I'm monitoring it carefully enough, I'll be well prepared for when it does shape up. So I've just added it in there because more so I think there's sometimes it's better to be more prepared than underprepared, because if price got there and started moving, yeah, sure, you can get in later, there's no problem with that as well. But if you could have for any reason been ready to take a trade, and you wouldn't have to class it as a mistrade, why not? So simple, just set alerts, set your areas. There's a little dotted line here you can see, and that's where I've set my alert. And I've set my alert there because I want to be alerted before we get to the override area. There will be more than enough time to be ready in this area because I will be waiting for price to develop after we've come to this area. So insurance entry for me, but more so of the time you do want to be ready. You want to be sharp for these things. You know, plan ahead, start forecasting again, and that's essentially where I'll do a reforecast and just evaluate all of the risk factors. Did we create a clear middle section? Is the pattern really valid? You know, what type of squeeze did we have? Is there this forming? You know, there's too many variations, so we go with the best variation for now and then move forward from there. So that's basically it. And then my final one, which I have on soft watch for US 30, let me just quickly, yep, US 30 is a high probability, high risk one. So as we can see with the Dow Jones, which is the US 30, we can see that we have this potential, like I'll call it more of a channel into this area. It's very large, and this momentum is phenomenal. And this is what I was talking about just now, about sometimes in the third leg we do get this heavy momentum. I wouldn't be surprised if this starts to now low steam, starts to get a little bit corrective and starts to make its way to the high value area, whilst the other indices are now shaping up as well. But it can still continue in this momentum, which wouldn't be unknown, honestly. From time to time we do see things like this happen. Could be a larger correction forming as well, pick up some more liquidity and so forth. With FOMC around the corner as well, we are going to see a lot of momentum throughout some of these indices as well. So hopefully with that market shift, this could be something that could be strategically placed if it lines up early on enough on a Monday, and then by Tuesday evening we've already moved back up here. If FOMC comes out, you're well protected. But hey, like I said, we're not here to trade the news, we're just here to take good trades. And then 4 hour, we have impulse correction continuation. Now this is something that I really like, which I'll just go on to the next one. So you can see over here on hourly, we have this clear expanding over here. Doesn't this one look pretty much the same, right? And this is what I'm anticipating, that the pattern won't look pretty much exactly identical, but I think it will be near enough the same where we'll be seeing something similar, and then people who understood this pattern can take advantage of the next. So That's something that I just wanted to share over there, and I think there's massive value in this alone. So I will be anticipating that and then going long. So if we can get into an entry in this area here, I think that's a risk that I'll be willing to take, to be honest. It is more of a risky one, but we do have two tops. This would become two bottoms. This could become a bit an expanding as well, larger expanding within it. But you know, as we've seen over here, we did have that internal expanding. Perhaps maybe we'll see another internal expanding here. We didn't meet into the reference point exactly over there, but you know, then again, we did break below this point, so that's why I'm looking over here rather than down here. I'm looking at this little point over here, see if we can tap into that, break through it, and then go. So similar to what we saw over here. And yeah, that's basically my sort of watch list and wildcards, etc. for this week. If you got any value from this, I'm really happy. If you have any questions or anything, please feel free to reach out to myself, and I'll be more than happy to. Why is this not scrolling up? Yeah, I'll be more than happy to answer any questions that you guys have. So you can drop a message in the comments below, or you can drop me a DM as always. So guys, have a phenomenal week and a good trading week next week. I'll also add this document into the description if you do want to have a little look at it. Obviously, you know, next week there's a bit of volatility, so a lot of this can change. So by midweek, what I might be anticipating right now could change because of the volatility that we see coming into the market. So you have to bear that in mind, that when you do have big news like CPI, FOMC, and a lot of volatility comes in, market direction can change. It's very, very possible. Sometimes the volatility comes in, we tap into a very valuable liquidity area, and then the market shifts and data changes, and we need to evolve with it. So if you don't have a lot of experience and you are not used to trading with huge volatility, it's good something to learn about and to know when the volatility is coming in at 7 p.m. UK time on Tuesday for US related pairs, but can also affect counter pairs, so basically everything. And yeah, essentially, I wouldn't over risk as well. I'd be very careful with that, because that's how you could blow accounts and probably lose your funding assessments or your funding account. So it's just something that I wanted to share with you to help protect you for the week coming ahead. If there is anything else that I could share with you, I would. But yeah, I hope you found value in this video, and I'll catch you guys in the next one. Take care.